Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
Today, we're jumping into, well, a really dynamic mix. We're looking at global economics and how that plays out in specific national strategies. We've got quite a lineup for you. Insights into the U.S. stock market, why it seems so resilient, then a shift over to South Korea, looking at their efforts to cool down a housing boom, and also their really ambitious plans for renewable energy industrial zones. Big stuff. Our goal, like always, is to cut through the noise, connect some of these seemingly separate dots, and give you those aha moments. Basically, help you get genuinely well-informed, quick facts, key insights, without getting lost in the weeds. Ready to dig in? Okay, let's unpack this, starting with some pretty intriguing news in the U.S. stock market. You had all three major indexes climbing, the S&P 500 and the NASDAQ, new record highs, second day running. And get this, NVIDIA, the AI, powerhouse, it crossed a stunning $4 trillion market cap at the close. Just amazing. Now, here's the kicker, the part that feels, well, genuinely striking. These market highs happened even with fresh tariff talk from President Trump.
He announced a hefty 50% tariff on some selected copper imports starting next month. That feels pretty counterintuitive, right? Markets up, tariff threats looming.
It really does. And what's truly insightful here isn't just that investors seem unfazed, but maybe why. It suggests a market that's maybe developed a high tolerance for this specific kind of political noise.
Like they've heard it before.
Exactly. Perhaps because past threats didn't always translate into, sustained economic damage, or maybe these specific copper tariffs are seen as just too narrow, too focused to really hit the big tech-heavy indexes that are driving growth right now. It kind of signals a change, maybe a maturation in how markets process political rhetoric, viewing it more like political theater than an immediate economic threat that's going to change everything tomorrow.
So if it's mostly seen as political theater, like you said, is there a risk? Could the market be, underestimating the longer-term impact if these threats actually happen? Or if they spread beyond just copper?
Yeah.
What's the tipping point, you think? When does rhetoric become a real economic threat for investors?
That's the million-dollar question, isn't it? The market's current stance seems to imply a belief that either these tariffs won't actually be implemented, or if they are, they'll stay targeted enough not to ignite a broader trade war, one that could seriously dent corporate earnings.
Okay.
The risk, of course, is complacency. This resilience could breed complacency if the political talk escalates into actual widespread policy hitting more sectors. It's a really delicate dance between perception and reality.
Fascinating stuff,
Yes.
seeing how global markets handle these big pressures. But let's shift gears now. Let's look at a nation dealing with a very specific internal challenge. South Korea. They're battling an overheating housing market. The Bank of Korea, their central bank, just made a unanimous decision to keep its main interest rate steady at 2.5%, which is pretty notable, especially since they actually cut rates twice earlier this year.
And if we, connect this to the bigger picture, the central bank's motivation is crystal clear. Policymakers have significant growing concerns, a sharp rise in home prices, a surge in household debt. It's particularly concentrated in Seoul and the wider metro area.
So it's a localized problem.
Very much so in terms of the intensity. It's not just general economic health they're watching. It's this specific pocket of overheating real estate that, well, it could pose systemic risks if they don't get a handle on it.
And it's not just the central bank acting alone here, is it? The government's already stepped in with some preemptive measures.
Yeah.
I read about a cap-limiting mortgage loan, something like 600 million won in those key overheated areas, trying to cool demand, stabilize expectations.
Exactly. And this really raises that crucial question about the delicate balance central banks always face. It's a classic tightrope walk. By freezing rates now, the Bank of Korea is hoping, I think, to avoid sending mixed signals. You've got these housing policies trying to cool things down. You don't want monetary policy accidentally heating them back up. It's like trying to steer a supertanker. Too fast, you crash. Too slow, you lose momentum. The goal is to keep that speculative buying under control without choking off the broader economy. Always a challenge.
And speaking of South Korea's strategic balancing acts, it's not just about managing these immediate economic pressures, right? They're also making some really ambitious moves for the long term, particularly in renewable energy, which, interestingly, ties right back into their broader economic goals. So what does this all mean for their strategic future? Well, they're planning to establish these special RE100 national industrial complexes. Now, for anyone not familiar, RE100 is that global corporate thing where companies commit to 100% renewable electricity. And here, Korea is creating entire industrial zones designed to meet that standard, powered only by renewables like offshore wind and solar. And to sweeten the deal, the government's even drafting special laws to give generous power bill discounts to companies that move into these zones.
Yeah, this policy is really aiming for two critical targets at once. It's quite clever. First, obviously, it supports the global shift to clean energy. It aligns with climate goals, attracts businesses that want that green credential.
Right.
Second, and this is equally important from an economic development angle, it encourages industrial decentralization, getting facilities away from the super concentrated Seoul metro area. They're hoping this drives new investment, new jobs into regional economies that could really use the boost. But there's a crucial point here, a challenge. While the ambition is definitely high, industry experts are already warning that attracting the really big power users like data centers could be tricky.
Why is that?
Well, ironically, increasing renewable capacity, especially intermittent sources like wind and solar, could potentially make the grid less stable.
The intermittency problem.
Exactly. So managing those risks, ensuring grid stability, reliable power 24/7, that's going to be absolutely paramount if these RE100 zones are going to succeed.
That's a really critical point about grid stability. Yeah. But given those economic incentives you mentioned, the discounted power bills, couldn't the benefits still outweigh those grid challenges for big users, especially if the government really invests heavily in, say, grid upgrades and energy storage solutions? What's the tipping point where the lure of 100% renewable power and lower bills overcomes those stability concerns?
You're right to flag the incentives. They're powerful. Success will absolutely hinge on whether the government can truly deliver on that promise of stable, reliable, renewable power. It's not just about generating it. It's about delivering it consistently. Think about a data center. Even tiny power flickers can be incredibly costly.
Absolutely disruptive, yeah.
So while the financial savings and the green image are very attractive, the underlying infrastructure, the grid management, it just has to be impeccable, rock solid. It's a massive undertaking, no doubt. But if they pull it off, it could genuinely redefine industrial location strategy, not just in Korea, but maybe as a model elsewhere.
And that brings our deep dive pretty much to a close for today. We've covered quite a bit of ground, haven't we? From global market sentiment kind of shrugging off political noise to a nation's very specific fight against a housing boom, and then its really forward-looking green industrial strategy. It's amazing, actually, how these seemingly distinct topics, market psychology, domestic policy, infrastructure plans, are all interconnected. And that's really the value, we hope, of distilling these key insights for you from all this complex information.
Yeah, and it maybe raises an important question for you, the listener, to think about. How will countries globally continue to balance these things, that immediate need for economic stability versus those crucial long-term strategic goals, like climate action and developing regions outside the main hubs? And what could that balancing act mean for investment, for innovation everywhere as they try to navigate these often conflicting priorities? Something to chew on. We hope this was a useful shortcut to getting informed.
Something to think about.